For the markets, we're trading down under by about 0.6%, had reached that 11,400 mark intraday, but managed to bounce back. We'll tell you and talk about all of this in just a few moments, but let's get you through the headlines. The truncated week has begun on a negative note. The Nifty falls towards the 11,400 mark. Most sectoral indices trade with losses. Indiabulls Housing Finance is witnessing its biggest ever intraday fall. Lakshmi Vilas Bank, being put under the prompt corrective action framework, is weighing on sentiment. Banks with exposure to Indiabulls Housing Finance are amongst the top losers on the Nifty. IndusInd Bank and Yes Bank are trading lower by 6 to 12%. And the Nifty IT index is the only sectoral gainer in today's trade. 4 out of the top 5 Nifty gainers are IT stocks. Good afternoon, Neeraj. In today's session, yet again, probably reflecting what we saw on Friday's session towards the end of trade, and 11,400 just about there.
Yeah, and banks leading the downside yet again. And not surprising that financials are under stress, and we'll, of course, talk about them in detail as well post our global conversation. But it clearly seems to be the bank Nifty leading the charge downwards, so about 80 odd points. But it's the Nifty bank, 777, 29,000, sub 29,100 or thereabouts for the Nifty bank, the principal culprit. The heat map will tell you the picture about what's happening, because it's those financial names which are essentially the reason why the markets are doing what are doing. Yes Bank 13.5%, IndusInd Bank about 7%, ICICI Bank 3.5%, SBI about 3%, and there are no takers. Stock like SBI currently about 275, 270 or thereabouts, just no takers right now, substantially off from the times when the reforms were announced. Just shows you how nervous the market is around the banking names. And of course, then the stocks like HCL Tech, Infosys, UPL, and a few others which are doing okay. So IT is holding out, but it's not able to quite contain the damage that the banks have done in the session today. And really, that's the story. Banks on the one side, IT trying to be the defensive play on the other hand, but not quite managing to do. In between, scattered around all of that, Devina, are stocks like Sun Pharma and Cipla on news, Z, and the kind of pressure that we're seeing on that stock, and some of the metal names which are also correcting today.
Z is a big worry there, Neeraj, because now, even with the extension, with the price coming as low as around 250 or 260 odd, it raises serious question marks on how much they can actually command for their assets right now. But from the broader market space, taking a look at what's been happening to the mid caps and the small caps, you've got both the indices looking weak this afternoon, while the benchmark indices have gone up closer to 0.75%. You've got the MRR of the mid cap index coming up on your screen, which is down 1.8%. So a very heavy cut that's coming. And as you can see, your top 10 gainers, the quantum of the gains are extremely minimal. So you've got about the SRF about less than 0.5%, Oberoi, which is up closer to 1%, 2% for Hexaway, again from the IT pack, so a little bit of a defensive play out here, and emphasis again the IT pack, which is up about 1.6%. But the losers are big. The entire Indiabulls group has been down and out. So while you don't have Indiabulls Real Estate here, Indiabulls Ventures is down 19%. Indiabulls Real Estate is also the one that's taken a heavy knock. Edelweiss has substantial exposure to real estate projects and financing out there, and therefore the stock's down about 10 odd percent. RBL Bank too is down about 8.5%. Union Bank, IDBI Bank, Indian Bank, Bank of India, everything that, from the banking arena is looking weak in today's session. Finally, just a quick glance at the small cap space to tell you what's been happening out there. So I'll start with the losers first, and there you have it. Indiabulls Real Estate comes in the small cap space. It's down about 10 odd percent. MMTC is down 8.5%. Dilip Bilcon, Dish TV, again Z Groups is looking weak. Delta Corp is down about 6%. Amongst the gainers, Sonata Software, Cyient, again, the IT favor kicking in. Credit Access, Grameen, and Linde India are up in the session this afternoon. But also taking a look at what's been happening in the futures and options space, Agam Vakil is joining in for that. Agam.
Right. So, well, we do have weakness. There's no doubt about that. We are seeing, further declines for the benchmark indices, and it's evident in the kind of numbers that we're seeing when it comes to the futures and options space. So when it comes to the Nifty, that is looking at a 9% increase in open interest, and it's not always that we do see such a sharp drop with over 5% accumulation in Nifty. So this certainly is fresh shorts taking place here. And look at the bank Nifty futures, a 54% increase in OI. Yes, we are in early days of October, but yet it is still very much more than average as far as accumulation OI goes towards shorts. Now, this is as far as your benchmarks are concerned, your open interest distribution overall. We continue to see, well, the pivot around the 11,500 mark, and today we have moved below that. So we're going to have to wait and watch whether or not there's more writing around there. There certainly is a lot of writing around the 11,700 call. We'll be keeping an eye on that one. And speaking of change in OI, again, as I was mentioning, 11,500 call and the 11,700 calls are the two most active and have seen the most amount of accumulation in OI. Speaking of a handful of stocks, and before I come to that, let's also address the VIX, because the India Volatility Index has been, well, relatively subdued of late over the past few days, and it'll be important to watch. It still hasn't moved up substantially. It's up only 1.5% despite the sharp cut in the indices. That said, let's talk about well, stocks, and of course you can't not mention Indiabulls Housing Finance because it is seeing a very sharp drop. There's about a 10 to 11% increase in open interest towards shorts there. We are looking at a lot of weakness in Yes Bank, one of the top losers on the index as well, and there's shorts there as well, 16% added in open interest. There is a sector, however, which is doing relatively well today, and that is the IT sector. So you do have gains in one, HCL Technologies. So HCL Technologies is up and about as much as 4% in fact, and we're seeing a 4% increase in open interest. And besides that, there's Hexaware Technologies in the mid-cap space, which is also doing very well. So some gains there. But well, if you just leave out the technology sector, the markets do not look that great, not for the index and not for the broader markets.
All right, Agam, thanks very much for that. So, at this point, things looking slightly bleak. Let's also begin with the global market voice, Altaf Kassam of State Street Global Advisors. He's joining us right now on the show from London. Altaf, thanks very much for taking out the time. What are the feelers coming in with regards to, now there could be some issues with regards to the capital markets and not just the trade wars between US and China, and how does that affect sentiment?
I think sentiment is the key thing. So far in the trade wars, all we've had is a lot of talk. We've had some tariffs, some promises of extra tariffs. Those have been reduced. But what worries us is that as sentiment continues to decline, then people, corporates have already stopped investing. We've seen capex spending go down. If consumers stop spending, then that's really been the only pillar that's holding up the global economy. And that would be a real worry for us.
Okay. The issue surrounding this constant rhetoric about stress between US and China, be it in form of the trade war or what now a lot of people are started dubbing as a capital war. Do you reckon it will have an overhang on the market? Because frankly, I don't think anybody is in a position to predict as to when do these issues will mellow down completely, if at all.
You're right. I think it's really hard to understand the internal dynamics, especially of the US president, but also of the Chinese premier. So it's very hard to predict what the overall outcome will be. We're still expecting, in the end, that some kind of agreement will be reached. But you used the word overhang, and I think that's a very good point. This is hanging over us. This poor sentiment is clouding investment judgment. And that is going to be an issue as long as we don't have a resolution to these ongoing disputes.
What do you advise clients, for example, to do? I mean, obviously people can't take a back seat and not invest, especially in pockets where earnings are showing. I mean, US, I think the economy is not doing all that poorly. We have pockets. India, for example, has announced this cut in taxes, which will help the earnings picture in India as well.
Right.
What are you advising clients?
Yeah, exactly what you say. We're not advising clients to stay on the sidelines. We do still believe that given all the firepower that central banks have, there's a lot of room for not only monetary easing, but also fiscal stimulus. And that's what Mario Draghi was talking about as well over the weekend. So there is room for stimulus. In other words, it doesn't make sense to stay out of risky assets altogether. So we are advising clients to remain invested in equities, albeit with a more defensive stance. We ourselves have been overweight REITs for some time, real estate investment trusts, and we believe that that's a trend that's going to increase as interest rates stay lower for longer. We've also bought some hedges, so we have some gold in our portfolio as well, and that's proved a very good defensive hedge in times when people are worried about the overall state of the economy.
By any chance have Bitcoin in your portfolio?
No, we don't, no. We see blockchain as a very sound technology for automating payments, but we haven't in our portfolio invested in Bitcoin per se.
Okay. Altaf, just want to get your sense on the emerging market pack right now, and where does India fit in terms of preference for investment?
I think, as you just mentioned, India has announced some fiscal stimulus, and exactly what we've been saying for a while, that monetary measures can only go so far, and now it's time for fiscal measures to take over. So we think India has taken some of the right steps. India has performed the MSCI EM for over this year so far, and we do expect some of that performance to come back. So we're cautiously optimistic on India, but what we need to see, as with other major global economies, is that this fiscal stimulus translates to the consumer. It trickles down to the real person and translates into spending, which will help boost the earnings of corporates. So far we're definitely positive on the stimulus that was announced, but we need to see its effect come through before we get more positive on India as an equity market.
Okay, so do you feel that so far the foreign institutional investors, which have in a way deserted India as a destination for investment, may still stay at bay? It's still not your time for them to actually come back and put a lot more money here?
I think it's an awkward time generally for investors in emerging markets. Unfortunately, as I've said a couple of times now, this US-China trade war, China being such a major component of emerging markets, not only in its weight in the equity and bond markets, but also in its importance as a trading partner to many of these countries. Until that is fully resolved, it's going to be hard to see investors jump back into emerging markets with both feet, and that includes India. But once again, the measures that have just been announced are definitely positive. And once we see the effects start to trickle through to the consumer, to corporate earnings, then I think we will see some cautious re-entrance of India by overseas investors.
All right. We'll leave it at that. Thank you so very much for being with us, Altaf. Appreciate you taking all the time. All right. So, Global Market Voice suggesting that it's still probably not the right time for foreign institutions to start looking at India in a big way to put that money back in. But moving away from what are global cues indicating, we come back to domestic cues. And as automakers continue to struggle for grip, they're turned to deep discounts and price cuts in the hopes of boosting demand this festive season. How much will this help the sector get out of the slump? Let's find out. We've got Rajan Wadhera, president of the auto body SIAM, joining in on the show, and taking this conversation forward with him is Rajan Wadhera from our research team.
Thanks, Devina, and thanks, Mr. Wadhera, for speaking to BloombergQuint. Let me begin, by asking you, with regards to the sale for the month of September, how it has been on the ground. What are the dealers, talking with respect to the retail sales figure for the month?
Well, I think till the first 15-20 days, when everybody was expecting some kind of a GST cut announcement, people had postponed their purchases and even the inquiries. But after the 20th September council meeting that was scheduled, it was clear that there's no GST rate cut. That in a way has started bringing the customers to the showroom. Inquiries are higher, and there are conversions also that are happening, and that is expected, because of the festival season. We expect, particularly in the northern states, a lot of conversion to happen, where the retails will happen on the 29th and 30th being the first two Navratra days, and even otherwise the footfall is improving. But if you ask the September numbers as such, because the inventory levels are of the order that we need to maintain them, the September, my personal assessment is that will be flat vis-a-vis last year, if not about 5% degrowth vis-a-vis last year.
Okay. Mr. Wadhera, talking about the dealer inventory, especially for M&M, how is it looking at current levels? Do you see some bit of respite coming in, given the fact that the wholesales and the dispatches have been reduced significantly from the OEMs?
For the industry, whatever I could understand is that October should be a good month for industry, because it has Dussehra, Dhanteras and Diwali. and to that extent the sales should be good. Inventory build-up for October will be high because most of us do close to 20% to 25% of our volumes during the festive season. But yes, I think 1st of November inventories will get corrected back to normal levels of 28 to 30 days. I'm talking of the CV. However, I think automotive industry is not just the UV and the PV, it is also about commercial vehicles. And commercial vehicle is to a very large extent not driven by festive season. They are driven by more business sentiments. They are driven by more consumption. They are driven by more GDP growth. To that extent, we are not very hopeful yet of the commercial vehicle segment picking up. So that's a cause of worry.
Okay. And in terms of the tax benefits which the government announced, last week, how do you think that will benefit the consumers? Your peers have already started announcing price cuts, owing to lower tax rates. How are you strategizing at this point in time?
I think there are two perspectives in this. One is the current discounts are far, far higher than the reduction in prices that is possible on a long-term basis. So festive season, these discounts are pretty high. Post festive season, it depends on how the demand is, and if that needs a further price cut, I'm sure every company will take their own call depending on what is their balance for the organization vis-a-vis the volumes, etc. However, yes, industry will need lots of money. So this corporate rate reduction that has happened, tax rate reduction, is going to benefit the auto industry in the form of investments that they may have to do for the real driving emissions, which will call for technology changes in the years to come. Then there is electric mobility. Then there is the CAFE, corporate average fuel efficiency norms to be maintained. So all these technologies and regulations will call for investments, and some of these investments will be available from the tax cuts.
Okay. And Mr. Wadhera, how is the competitiveness in the marketplace? You already spoke about discounting, which is, quite high. In fact, I was reading some brokerage reports. It said that August, September have seen the highest ever discounts for the 2019 calendar year. So how really is it in the marketplace, especially for the passenger vehicle segment as well as the UV segment?
Yeah, true. So in the UV segment, this is the festive season, and typically in the festive season, discounts are quite large. However, I think this time the discounts that are being seen, which are being rolled out by various manufacturers and members of SIAM, are slightly on the higher side, obviously to generate more demand. And it's also the consequence of when new products come with introductory prices. And in order to have competitive intensity does call for a higher discounting, and the expectation that everyone has is that it's a festive season, a limited season. Therefore, sales campaigns are this year a little higher than I think they were last year.
Sir, many consumers were probably waiting for the GST cut. That didn't happen. Now the festive season has started, starting Dussehra, we'll have Diwali, coming up in a couple of weeks. How do you see, the overall demand? Because earlier the industry was expecting some growth in August, September, year on year. That didn't happen because of weak sentiments. Now, what do you think in terms of the overall demand for, probably the next 2-3 months, say October, November, December?
So, well, let me tell you, these 2 months of September and October will generate good demand, and the subsequent months, November and December, are typically low growth months. But there needs to be an understanding developed and awareness in the mind of the customer that when BS6 gets introduced, we've been talking about it, especially in the commercial domain where It's a diesel engine-led technology, which will become 8 to 10% more expensive. So customers should know what decisions they should take, which is good for business. And we expect there will be a lot of pre-buying happening starting December, Jan, Feb. So that should also add to the volumes.
And Mr. Wadhera, can you give us a perspective on the commercial vehicle space now that the government had announced some extra depreciation related benefits? Also, a lot of public sector units are clearing vendor dues. Can we see some good pickup in the commercial vehicle space? Because the analyst poll that we conducted here at BloombergQuint, it said that we are expecting a 40 to 50% September volume decline. So I would like your comments on the commercial vehicle segment and the growth expectations moving ahead.
Well, I think we will be able to better answer that question after we see figures of September and October. At the moment, there is no economic activity that is really pushing the sales of commercial vehicles.
Okay. Thank you, Mr. Wadhera, for speaking to BloombergQuint. So that is a perspective coming in for SIAM. Not a great month of September expected, at least from the analyst community. Let's see how the festive season really starts from the first week of October.
What is the number? Some 24% dip in Maruti sales expected and 19% in Royal Enfield, etc. Obviously,
the base effect. I mean, last September was actually a very good month.
So,
right?
yes, Devina, last September onwards, we saw some inventory build-up. So, you're correct that the base was slightly high. The dispatches were slightly high. This time, the dispatches are also lower for two reasons. One, there is no demand. Number two, there is a lot of inventory sitting in the marketplace. So, the OEMs are keeping their plants shut, trying to get rid of the older inventories. A couple of factors, but clearly the sentiments also on the ground have not yet improved. As Mr. Wadhera was saying that a lot of consumers were postponing the buying decisions given the GST cut was anticipated. That didn't happen. So now probably some final buying decisions should happen in the month of October.
Well, let's wait and watch. Thanks a lot for that, Yatin. Maybe some bits of Navratra benefits would come in for the month of September as well, late maybe. But conversions, I remember Yatin saying in the morning, conversions might happen maybe, just maybe, in the first 10 days of October. And then, of course, when you hit Diwali, you might actually see some bit of demand coming back. Let's wait and watch. I mean, the auto industry badly needs that. And they've done that bit, passing on the tax cut benefits, at least Maruti has.
The kind of discounts they've been giving.
Yeah, pretty interesting. Well, but speaking of autos and staying with the space, vehicle makers may not have been able to sell more cars in September, but the index posted one of the best months by some distance, really, in some time. Yash Upadhyay is here to tell us, or give us this data and the statistics. Yash.
Good afternoon, Neeraj. So that's absolutely right. The Nifty Auto Index that has surged almost close to 6% for the month of September. In fact, slightly higher than that, which is the best monthly return that the index has managed to register in at least close to 1.5 years, or since April of 2018. Now, this was on the back of the several government measures which have been announced in order to boost the economy, as well as the expectation of a bump up in terms of demand outlook in the near term on account of the upcoming festive season. Now, we saw that most of the auto stocks, they rose sharply after the government's decision which came on Friday, September 20th, to cut the corporate tax rate. Most of the brokerages, they are of the view that this would be a big positive for the entire industry. Edelweiss, for one, expects the EPS for the auto industry to grow by as much as 6% on a year-on-year basis for the ongoing financial year. And on the back of that, we saw a lot of the index heavyweights like Maruti Suzuki, Eicher, as well as Bajaj Auto move anywhere up between 12 to 8% just in the month of September. Now, as far as demand is concerned, we did a BloombergQuint dealer survey where most of the dealers, they tell us that the last 10 days of the month have been extremely positive for the industry. There has been a significant jump in terms of queries as well, and that is mainly on account of the higher clarity that the customers now have with respect to the whole GST situation, pricing, and not to mention the huge discounts that a lot of these OEMs are offering. So clearly, the momentum is on the side of autos. It was not the best performing sectoral index. It was just a bit lower than the Nifty Energy Index, which has moved up on the back of reports of government privatization. But the auto index, after a very long time, seeing 2 successive months of a positive gain, and in fact the largest in at least 1.5 years, something to note.
Okay, thanks a lot for that, Yash. So that's, of course, the auto index, which is doing something in stark contrast to what the auto sales are likely to show up for the month of September gone by. Well, the other big talking point in today's session has been what's happened to financials, led predominantly by Indiabulls Housing Finance. It's plunged a record 38% intraday after legal and regulatory concerns made investors nervous. Shefali Malik is here to take us through the details of what's plagued the stock. Shefali, I can probably think of two key reasons why Indiabulls has done what it has done today.
Well, yes, two that I can point out. One is that Lakshmi Vilas Bank has been placed under the PCA framework. So the reason that becomes a concern is because of the ongoing merger proposal. So now with this coming under the PCA framework, the concern is that what happens to the merger process? Does it get delayed, or does it mean that it's completely off the table? So that is a concern that is playing out on the minds of the various stakeholders, and hence the steep plunge that we are seeing. The other one is that on Friday, Delhi High Court agreed to hear plea seeking probe against the company. Remember, it's the same plea which was filed by Citizens Whistleblower Forum. So that happened, in Delhi High Court issued notices to the company, SEBI and Reserve Bank of India seeking their replies within 2 weeks. So both these things put together have come down heavily on the stock price today, and primarily Lakshmi Vilas Bank merger, because the company was really looking forward to that. And off the record, we spoke to some officials from Indiabulls Housing Finance in the morning today, and they told, and from their side, they were trying to defend that, it makes all the sense for this merger to go through, considering the weak capital position of Lakshmi Vilas Bank. But what RBI has in its mind, probably something different. That is why the PCA framework has creeped in.
All right, Shefali, thanks very much for that. In fact, since we're talking about that, it will be interesting to see what kind of exposures do some of these banks have to the group. So while the stock's down 30%, we're looking at the biggest exposure to SBI, and we've seen how the stock has performed in today's session. SBI has an exposure of about 8,260 odd crores, and this is as per a note from Jefferies. So keep that in mind. Bank of Baroda, another 3,680 crores. HDFC Bank has about 2,340 crores. Axis Bank, a relatively smaller amount. And Yes Bank, this is one more reason to be a little bit more worried. While the sum is just about 250 odd crores, and it's probably amongst the least in terms of the exposure to Indiabulls, but it's just a spate of negative news for Yes Bank that's weighing down on the stock one after the other, and no bottom for the stock scene, at least for now.
Yeah, the other bit also would be what portion of these loans are collateralized against very secure assets or no, and I mean, I would be really surprised if a large portion of HDFC Bank's exposure turns out to be bad. And not that we're saying anybody's exposure will turn out to be bad. I believe IndusInd Bank, in a conversation with one of the media houses today, suggested
they said they've securitized it, as they have enough backing.
Enough backing as well. So you don't quite know which way this will turn up, but these are important numbers to monitor. The only question is, will this lead to a sustained pressure on some of these financial names? Indiabulls Housing Finance, and as a result of that, Yes Bank, and Yes Bank in itself, with the kind of book that it has, and what does that therefore do, the sentiment in the financial space, all of that, very, very important. This is something that we are going to be talking about with our experts. They should be joining us any moment. But while we wait for that, a small conversation with a very important company. Wire and cable maker Polycab has reopened its experience center in Mumbai. BloombergQuint Sharad Dubey spoke to Inder Jaisinghani, the chairman and MD of Polycab, to find out what is in store for customers. Listen in.
We opened because we came in the range from last 3-4 years in the consumer products, and number of people which basically know us only in wire and cable. So we thought better to be open the showrooms, so at least customer can come and see our other products. Because after giving advertisement in the media continuously, they are asking for a product range. But when we open the showroom, so at least customer will come, because this is a retail market. So all people will bring the architects and consultants and people who are buyers to show them the product here. So it is very good. We are open now, but we are going to continue this opening in this coming year, full-fledged.
Okay, so in terms of your FMAG segment, which you have opened since 2014, multiple brokerages have come out, where there's going to be a strong growth in this sector. So what kind of product launches, we can expect going into FY20?
We are basically coming in first in all electrical equipments like switch gear and motor, pump, whatever is basically required in the construction side, water heater, fans and solar pumps and solar rooftop, everything we are coming for first construction line. We want to complete that first and after that we'll think other items. So basically, definitely, which is required in every flat, every commercial places, we are coming in that now.
And apart from this, the festive season is coming up. Since you are dealing in the B2B category, so for your wires and cable segment, what is the outlook looking like, for this quarter?
No, basically, because of our wire is connected with our consumer product, this quarter, because the Diwali season is going to be good. It's basically a connected item with all festivals, so it is going to be good.
And so if you could give us the outlook, for the company for FY20 and any kind of a margin guidance, since you're a leading player in terms of market share for cable wire, that's around 18%. So what kind of growth we can expect and what an overall outlook we can have?
In consumer product, we are looking at growth of at least 30%. And our wire and cable, we are looking for a 10 to 12%. But overall, we are looking consumer product 30% because that is our new product. We want to get a more market share. So we are working very hard on that.
All right, that's the management at Polycab. Remember, all of these new listings, and we did bring that to you just a few days ago when we highlighted how all of these new IPOs that got listed over a period of 1 year have performed, and all of them have done really well, barring just two names which didn't manage to give you a positive close, and one of them being, Wind Solar. The other one, obviously, taking a look at what's been happening in the market right now before we bring in our market experts, taking a look at some of the bigger moves that have come in, and now, obviously, you've got some pain in your high quality names as well. So Bajaj Finance, though, has not really fallen off too much, but not done too much in today's trade either. Though Bharti Airtel and Telecom over the last 2 days has really done well. So Bharti Airtel in today's session also is holding up the session, and the last few minutes the stock has come back from the red and it's now up about 2.25%. Hemen Kapadia of KRChoksey is joining us right now on the show. Along with him, Ajit Mishra of Religare Broking is there, and on the fundamental side we have Kalra joining in. I'll start off with you, Hemen. First off, on the Nifty 50, we're actually not doing all that bad because we've seen a decent enough recovery. We were sub 11,400. From there, we've come back, almost nudging 11,500 now.
A very good afternoon to you, Devina. Thank you for having me. I guess thing is, we've had horrendous rollovers. I guess the OI, as far as the Bank Nifty, started the new settlement with 8.88 lakhs. If my memory serves me right, Devin, I think that's a 1.5, 2, if not a 2.5 year low. So very light, nothing happening. We have a holiday, we have a credit policy that's probably been discounted, and I don't think people want to do anything. And after a 1,000-point rise, the market is going to hatch eggs. If it starts running away from here, I think it'll just implode. So it needs to consolidate, digest its rise, and then try to make a move towards 11.8. So there was a gap which I spoke about last week also, Devina. I said it would get covered. Bank Nifty did, the Nifty hasn't yet. It made an attempt, covered partially. So I still believe that, downside up is a bit limited at this point in time. It's a range-bound market. Above 11.6, we could gain a little bit of traction, but I don't think anything looks like happening. And we're going to take a few more days before, things start. We need to stabilize and digest a 1,000-point rise, and I don't think it's going to happen in jiffy, Devina.
So no Nifty trade?
No, I have a Nifty trade, but I have a strange Nifty trade. I have a sell on the
You're calling your trade strange? Yeah. Let's call it peculiar and difficult.
Okay, peculiar and quirky. Okay,
quirky.
Yeah, so I want to sell 11,000 put option at two levels. I think the market has bounced back from where it was, so I'm not sure if that's still applicable, but I still stick to it. Sell 11,000 put option at 75 and sell the 11,000 put option at 100. That gives you a premium of 175, keep a stop loss of 210 and keep a target of 105, because I feel that 11,000 is sacrosanct at least for the next 2 weeks till the results start coming. This is not a trade for the whole month, it is just for 10 days. And I think if it dips a bit, rather than going long, because I don't think anything's happening. And I'm not selling a strangle or a straddle because I feel that the upside can get covered up somewhere. So I'm just selling the 11,000 put option twice.
So you would sell just to, and before I come to Ajit, you will sell the 11,000 put option, which arguably, let's assume that the price is between 75 to 90 right now.
Okay, it was 68, 70, but I believe
let's assume it's 75.
Okay.
So you will sell it at 75, and then if it rises further, the price of the option, you would still sell it at 100.
Yeah.
And
which means the market will fall further, and
so the premium you totally
expand.
got is 175. I have a stop loss of 210 and a target of 105 because I think the market will dip, but not dip enough to warrant a meltdown. And I think there is still an upward bias left. That's why I'm not selling a straddle or a strangle. I'm just selling a put one side on the downside. But the market could dip some.
Okay. Ajit Mishra of Religare Broking with us on the show. Ajit, what's your opinion on the index? A simple, straightforward one, or using options as well?
Yeah, good afternoon, Neeraj. So basically, yes, it's a straightforward trade, but the levels have changed a bit because the market has rebounded. But we are now moved to go long in Nifty futures closer to around 11,400 mark. Because Neeraj, if you notice that the entire move which we have seen from the top to the recent bottom, so closer to around 12,100 to 10,600 mark, the 50% zone comes closer to around 11,370. So that's been a critical region in case if Nifty has to maintain this momentum which we have seen of late. So I would prefer going long on any dip again closer to around 11,450 to 440 levels. Now the stop loss would slightly on the higher side, closer to around 11,370, and 540 to 650. That should be the target area.
Okay. What about individual stocks? Ajit, I'll keep it with you.
So, Hemen and Dabur, both on the long side. So, Hemen, we have seen after a very strong surge from the 100 EMA support area, it has retraced a bit. So, offering a buying opportunity to those who have missed the chance earlier. So, it's a good buying opportunity. 690 should be a stop loss, and closer to around 750, that should be a target area. And Dabur, I feel among the FMCG majors, is just consolidating after retesting its previous high. So it's again buying opportunity. So one can definitely go long with 440 as a stop loss and 460 as a target.
What about you? Your stock ideas?
Okay. Two stocks. I have a buy call on Wipro, simply because don't know why IT is going up, but it's going up, so it'll go up some more. So buy on Wipro at 238, stop loss 234, target 246. We're just riding piggyback on HCL Tech and TCS and Infosys. Oversold. Downside appears limited. On the verge of giving an upward bar reversal today. Early, 2 early, 3 early indicators have given crossover buys. And the second one is a buy call on Strides Pharma at 309, stop loss 305, target 317. Same logic, high volume spike of 15 lakhs a few hours back. Levels have held, so that would be strong hands aboard. We are playing for a recovery, not a rally.
Okay. Samir, Indiabulls.
Yep.
I mean, it's like that wound which started to heal, and then the scab has just been ripped off.
Yeah, so I think now it's almost the final nail. From my side, it's a final nail. I'll give you a simple reason. If you see the debentures, the NCDs, they've spiked to around 19% for 2026. So that's on a coupon of 9%. So it's almost doubled, right? And with the high liquidity, it's not that if the liquidity. So, and the other thing, if you see the short-term liabilities, that's around 25,000 crores. They have a cash on March 19th of 23,000 crores. So they don't, and eventually they're selling off all their loans majorly to banks to fund the additional cash sources. So I think from my side, it's almost like it's ready for a big kind of a fallout. And it'll really hurt the banks which own it. This will be kind of a second leg of NBFC crisis which we might see, because again, if Indiabulls comes into that depression which I might preempt, then we really have a big trouble brewing out of.
You know, the other NBFC that has a lot of exposure to real estate, and I'm not just talking about is Edelweiss. They have a big lap book, and obviously we've not been able to break it down in terms of which banks have more exposure and what goes wrong if, Edelweiss. Anyways, Edelweiss is now back down to double digits, I believe. What happens from here on?
So I think Edelweiss, if you see the initial wealth management deal which they did recently, that is able to support in the short term. But if I see the medium and long, they again have a very similar pattern of cash flow not being sustainable. So these are just having these kind of deals or asset sales to suffice the cash flow in the short term, which really doesn't help them grow the business or gain the market share at these kind of point of times. So I would rather stay away or exit at any kind of places which I think is even best for now.
Would you believe that because the growth capital availability for almost any of these financial names which are being spoken about, rightly or wrongly is a separate case altogether, but because that growth capital will not be available and we do not know for how long that will be the case, even if an individual investor might find value there, the markets at large will not, and therefore it's best to shun them away and put that money, even if the other stocks are more expensive in those names, because the probability of you making money is higher there. So, Bajaj, an HDFC, a Kotak, etc.
So I think if you go back on September 2018, right, it's been almost now a year. Now, if you see that past 12 months, no one except couple of names have been able to get the growth capital. Let's talk about Bajaj Finance, let's talk about SGFC Limited. So these two were the ones.
You're talking about NBFCs?
Yeah, I'm talking about NBFCs. Let's particularly talk about NBFCs because over there they don't need to survive a capital. They don't need that cash flow issue mismatch to handle.
No, but Sameer, sorry to cut you, but my question is, I as an individual investor don't need to buy an NBFC. I'm not running a fund where I need sectoral exposure. I can buy a bank also. Should I right now get out if I have an Edelweiss, an Indiabulls Housing Finance and put that money into either a well-run NBFC or even a bank like Kotak, Axis, HDFC, ICICI, whatever?
I think in past 12 months, if you haven't done it, it's the right time to do it.
Now also.
Yeah, because I see now a second leg of issues coming up in the NBFC, which will trickle down to the real economy. Because see, all the slowdown, everything is connected to financing world. If the financing world kind of goes into second phase of kind of a downturn, then another real economy hit might be there. So I feel it's always better to switch at any point given rather than waiting for all the dust to settle and then average it out. So there are only few names I can handpick: SGFC Limited, Bajaj Finance, Canfin Homes. These are the three names in NBFC sector which I'll pick today. Except than this, I don't see a lot of cash flow matching up in next 6 to 9 months for a lot of companies. So there is a big trouble brewing over there where I don't see any revival for the rest of them coming up very soon.
The risk of extending this discussion too much on NBFCs, but gold finance companies have done reasonably okay.
See, what has happened if you see their portfolios, whether you talk about Muthoot or Manappuram, right, their whole focus now has gone to non-gold. Their gold loan book, if you see past couple of quarters, has grown only 5 to 6%. So you're trying to increase the market share where you were not present. So that really helps out, but eventually your whole cash flow system is from the gold loans. Your whole valuation comes from there. So I think in the next 12 months, if even loans stop coming to you or cash flow stops coming to you, I think then you'll again have a trouble over there as well.
Okay. Well, that's NBFCs and what they have done, or NBFCs and banks and the kind of moves that we've seen in those companies in the session today. What else? I mean, just looking at the kind of moves that the IT stocks have made today. I know Hemen mentioned that can't quite figure out, but he's going ahead with the trade simply because the stocks have done well. Nifty IT is up 2%. Defensive buying, Sameer, or would you reckon that there is probably merit in trying to own one of these names for 6, 9, 12, 18 months?
So I think for me, Infosys and TCS and HCL Tech still stand out because right now I have to look at my capital protection in one way. Second, if I see next 12 months, they'll pay me more cash back than any other listed firm in a certain way if you calculate. So I think the safety of the capital and the repayment in terms of cash flows is better for me staying put in these companies. But if you see, there's another risk to it. US elections are coming up. So BFSI spend really goes down 12 months before that, and that's really happening. So if that rolling stops, then again you might see a small dip in these numbers, but I'll still hold on to them.
Okay, well, so that's one aspect. We're going to get a company in about a minute from now, or a minute and a couple of minutes from now, and that's Gujarat Alkalies. But which brings me to a pocket which hasn't really quite corrected. We speak about specialty chemicals and how good the numbers, etc., have been. I was looking at the fall of the last 2-3 weeks. While a clutch of mid-cap names might have corrected and then bounced back, even in the fall, some of these specialty chemical companies didn't quite correct too much. Yeah, this one is one, but Aarti Industries or Vinati, etc., there might have been 5, 10, 15% corrections, but largely these stocks have been very, very stable. So it's an interesting pocket, one that investors shouldn't shrug off. That 1 month return of Aarti is because of corporate action and not necessarily because of the fall that the stock would have seen. So keep that at the back of your mind as well. Ajit, you want to come in on these names today? In the morning, a couple of specialty chemical names came up in technical conversations as buy calls. Is there anything within this set of stocks that I spoke about that you like as well?
Gujarat Alkali, as you rightly mentioned, that it has been holding strong despite what we are seeing across the board, the volatility. But I would say just a rebound, and this level of closer to on 480 is going to be critical. So in case if somebody wish to go long for the short-term trade, I would prefer going long in again the defensive pack rather going for any small cap names, because if we talk about these counters, the volume is slightly on the lower side. So again, in case if markets correct in the current level, it might be difficult for a trader to exit these counters because the volatility is going to be remain on the higher side. But still, in case if somebody wish to prefer these names, I would go, suggest to go ahead with Gujarat Alkali.
Sameer, what happens to Z?
From an investor point of view, I like to take an exit here only because there will be a lot of negative and speculations being made here on. Firstly, if they would have met the payment exactly in terms of what they were supposed to, and that would have led by a strategic sale, then the story would have been totally different. Now it's a financial investor and the amount is not as much as expected by the mutual funds or the lenders in a certain sense, and roadway projects are still stuck up for sale. So I think in next 6 months also I don't see any reversal or easing of pressure until unless they really sell out of the business, which they don't have an intention, which was seen in the first phase itself.
In any which ways, we've been talking about how these assets and to monetize them, it takes time. So, and the pressure that's building up on the promoters to make sure that they garner that kind of money. They've said that they've asked for an extension so that you don't have to distress sell these assets. But the clock is ticking.
But see, from a promoter's point of view, I just need to sell something to pay off, right?
Yeah.
But from the lender's point of view, I've already given 6 months. Now you want another 3 months or 6 months, whatever you've asked for. I'll really not agree. I'll get whatever, even if you see, I'm still getting a 260, 270 rupees per share. Tomorrow, if I know the situation that your business will not run that wisely, so I rather sell it today rather than selling it at 150, 120 when you're not able to meet that commitments. So from a lender's point of view, I think it's better for them to liquidate at this price rather than waiting for that kind of extension to play out.
No, it's interesting, Devina. We keep on talking about financials, and I think a conversation that happened before I went off for a short break was that how people might actually start looking at non-lending financials in a big way, because there is relative safety. And a staggering move in HDFC Life Insurance. It just tells you a story, doesn't it? By the way, ICICI Pru 2 is up today, but HDFC Life is at 602 rupees. These, for anybody who thought that at 500 the stock was expensive, I don't think he or she would be able to take these valuations, would believe that, okay, these are valuations where people should get out, but there are fresh people or fresh money coming into these names.
But just look at the year gone by. It's not as if, there was a period of lull, and then because there was a lack of investment opportunities that people started to suddenly find HDFC Life more
at any single point of time you bought
to invest in. It's a graduating slope up, which means that at every point in time, people did find value in an HDFC Life and they kept putting in money.
And therefore, as a result of that, ICICI Pru now, because of the relative valuation catch-up, is also gaining. I mean, yes, of course, it's done slightly better than what it used to, but look at ICICI Pru in today's session as well. I think it's at northwards of 450, if I'm not wrong, 460 or 470 or thereabout, yeah, 465, about 1.5% higher. So there's a bit of a valuation catch-up in this one too. It's just very stretched valuations, but very high demand for quality, I reckon, which is leading to this.
Yeah, but also probably drawing a comparison on similar lines. If HDFC Life and the uptick that it's seen has rubbed off and had a rub-off effect on SBI Life and ICICI Pru, maybe not on an apple-to-apple comparison.
The
but
AMCs.
No, I actually wanted to talk about BPCL and how people have started looking at that from a privatization standpoint, and now the valuations that ascribes to itself being a privatization candidate. Will that have a rub-off effect on either IOC or an HPCL? Do you see that?
I think HPCL, any which way the deal is done.
Yeah, not HPCL, IOC.
So IOC, it can have a speculative effect, but I think till the time BPCL privatization really takes up and
something concrete
ends up happening.
Yeah.
Then really the IOC valuation might catch
about
up.
time, right? It's announced already. Therefore, what do you do with the stock?
But see, the only point is, one is the news coming through reports and then the execution. I've always found out that it's always proven that you buy on news and then sell on the actual privatization. So I really don't know whether the privatization will give such a valuation when the whole global economy is going down. You are talking about more electrical use in next 2050, right? So I think for that kind of valuations to charge right now, it's already up 50% from the date of announcement, if you take at least 30 to 40%. So that kind of a premium is already in the place. So now highly unlikely, so I rather play through a HPCL or a IOCL if I really want to play that privatization.
Okay, got that. The other pocket is the other stock rather. And Ajit, come in on this. Do you have a call on Titan?
Devina, yes, after retesting its record high, we are seeing consolidation and marginal profit taking is expected, but that should be considered as a buying opportunity because the overall trend looks very strong on chart. And if we talk about, counters which are participating in the rally right now, Titan being one of them, who's been consistently, following the market trend. So I feel any dip in the Titan should be considered as a buying opportunity.
Okay, speaking of Titan, let's hear out what the outgoing chief of Titan had to tell Devina earlier on in the day. He spoke about the journey of Titan and how it has grown over the years, and of course what Titan could do in the near term. Very interesting, Devina, that newer segments might actually tend to be bigger than the erstwhile segments. I mean, leave jewelry out, but the other erstwhile segments.
Yeah, watches and Taneira, which is their new sari brand. And the market size of there is about 25,000 crores, and watches is about 8,000 crores. So just
and we thought that people don't wear saris and people wear watches. Well, imagine.
And purely by the fact that the market size is so stark. I mean, it's 1/3 of the sari market. So they can easily scale up and grow that segment to garner much more than what watches garners for them. But I think it's better. I mean, listen out to what he had to say.
Well, watches is still at about 14%, 13, 14%. But the category size, the industry size is only that much, whereas the industry size in jewelry is much bigger. So let me just differentiate. I'm not so concerned about the relative sizes of each business. Each business has to lead in that industry category. So achieving mind share before market share, first of all. And I think we are the influencers even in eyewear, although the market share there is about 12%. Okay? Whereas in jewelry, it is even lower. It is about 5 to 6%. In watches, it is over 40%. So, but in all three categories, we are leaders. Therefore, even in fragrances and saris, we will achieve leadership very shortly. The size of the sari, potential size of the silk sari business is far bigger than the watch business. I'm talking about the total industry size in India. and therefore the potential to grow, the opportunity to grow is very high, and therefore that will kick in with a percentage contribution to the total. But jewelry is a 250,000 crore market, whereas sarees is about if we take a special occasion wear sarees, it's about 25,000 crores. It's 1/10, and watches is in the ballpark of 8,000 crores, which is 1/3 of sarees. So though that proportion will always remain in the company largely, but each of them is individually driven through a structure in this company where the CEO of each of those businesses has a end-to-end responsibility. Therefore, I'm not too worried about jewelry. It happens to be big. It will be 83%. It is 83% last year, but the excitement of creating categories and pursuing those to leadership in their own categories is the strategy within that. But across the company, the thing that binds them all together, the Titan company, has this loyalty base, which is Encircle is the program, and that is where we have a very large asset, about 13 million members and growing every month, and therefore that is the greatest potential of being able to cross-sell.
Obviously, these are trying times, so you have your own cycles and periods where a company sees its ups and downs. Titan has managed to weather this pretty well so far. But in terms of an outlook, in terms of how do you see Titan growing, obviously, you can't expect it to grow the way it did grow in the early 2000s. Times have changed and growth rates have come off. But what would you expect Titan to do?
Well, we have already, charted our journey to up to 2023. We expect to cross 50,000 crores, 53,000 crores in terms of consumer prices is how we have articulated our ambition, with touching 50 million customers in that year through our multiple products. So that objective is still alive in the company. This year, the targeted growth rate in the first 6 months is not visible, and that when we completed the first quarter itself, it was not visible. Its second quarter has been trying, but the second half is expected to be much better thanks to the festival season. Therefore, the overall goal of 2023 still doesn't change. We will have to grow much faster in the next year to achieve those kinds of growth rates. So, we had enunciated this in 2018 as our 2018-19 as our 5-year plan, and we are sticking by that plan of 53,000 crores and 50 million customers in the year 2023.
Well, that's of course Bhaskar Bhatt on its final day as the head honcho of Titan, speaking about what could happen next. Remember, Titan has gone a double upgrade of sorts in the last 10-15 days from Morgan Stanley. It's down today, but that notwithstanding, they raised the target to 1,300, I believe, about 10 days ago, and then have raised the target further to about 1,450. 1,269 is where the stock is trading at. Again, a stock with stretched valuations. Well, maybe the mid-caps don't have stretched valuations. Let's find out what's made it to Sharad Dubey's list of some of these which are shining in the session today in the Fab 4 stocks of the day. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock is HCL Tech. The stock has gone up more than 4%, its highest level since almost 2 months after the Citigroup has raised its opened a 90-day positive catalyst, and also they have talked to the management and they stated that the revenue growth is between 14 to 16% for FY20, and the EBIT margins will be around 18 to 19.5%. Up next, we are having McNally Bharat Engineering, which is up almost 4% after it has signed an agreement with a Turkish-based company, Kalon. Both parties are going to have a 50% stake, and they will be undertaking infra projects. Next, we are having Dalmia Bharat, which is up almost as high as 3% and is right now almost 1.5% with almost 19.5 lakhs shares which have been traded, in an exchange deals. The buyers and sellers are not known yet, but we'll get you those details post the market hours. And the last stock of the day we are having is Kalpataru Power Transmission, which is up almost 3% after it has got orders worth 775 crore rupees for its transmission and distribution business across government clients as well as private clients. So these are the stocks buzzing in the space today. Back to you.
All right, Sharad, thanks very much for that. Those are the Fab 4 stocks of the day. Do watch out for them as we approach market closing. I think we got a half an hour left to go for market closing. Just want to quickly look at some more market data points, talk about the turnover a bit, talk about the advance decline ratio a bit, and then take a look at how Europe has been trading right now. So starting off with whatever my producer wishes to put up, can we have the turnover, please? Yeah, we've got about 32,000 odd crores in terms of the NSE cash market. NSE F&O is 9,15,000 odd crores. So it is picking up, and probably this is the first time that we've seen some bit of normalization in terms of the cash market turnover after that extremely high number that we've seen in the entire last week. So I think the lowest last week was closer to about 35,000 odd crores, which probably we shall take down in today's session as well, since we're still half an hour short of closing. The other one would be the breadth of the market, and that seems to be extremely weak. 1:4 in favor of the declines this afternoon, and that's been there from the word go this morning. So it just keeps on expanding there. And Europe, no major cues coming in from there. You've got FTSE 100 trading under by about 0.1%, CAC marginally in the green, and DAX is absolutely flat. Hemen, I'll come to you on HDFC Live since we were talking about it earlier on, and I think Neeraj wanted to take that question to you, but I'll just take it over from him. What would you do with HDFC Live?
Too late to buy, too early to sell, no reversals. We've had a one-way move, Devina, from 342 to 610 or so. I don't have too much data to take a longer-term call, paucity of data. Formed a rounding bottom, has done well. One gets the feeling that it seems just a tad bit overbought, but no reversals yet. So fresh buying, no. I think as long as it remains above 570, everything is fine. I would wait for a correction before venturing in the stock, if it doesn't look to be in a mood to do so, but yeah.
Okay, well, let's wait and watch. HDFC Life, maybe Hemen believes might be too late to look at. Is BPCL too late or too early, Hemen? Since we are talking about AMCs and oil marketing companies, let me ask that question too. As a trade, BPCL.
I'll buy a put. We're at 470, I'll buy the 450 put option. I think we are ripe for a correction. Not too much. We've moved up from 373 to 482. I think a small 15-point decline is around the corner. So, yeah, but the undercurrent is still strong. So I just buy a small put for a trade for probably 5 trading sessions.
Otherwise, you wouldn't, if somebody has a long position, you would advise staying long with a tight stop or something.
Yeah, or I'd say book profit, and when it crosses 482, you can go long again.
Okay, when it crosses 482, you can go long again. Great. Okay, we're talking about Gujarat Alkalies and Chemicals. The case for the chat with the company is that the board is going to appoint an expert to explore the options related to capital restructuring. We should do a quick conversation to try and figure out how this will impact the company. PK Gera, he's the MD of the company. He joins us on the phone line from Delhi to talk about this. Mr. Gera, thanks so much for taking the time out and speaking to us. Can you give us some details about what is the timeline for the same, and what would this whole process entail?
Yeah, this is actually increasing the value of our investment in GACL to the shareholders. So the board has been concerned that the PE level of the company is rather low, and when the average PE level of the chemical companies are almost maybe 1.5 times what we have right now, 5 and 5. So the shareholders have been demanding during the AGM, many of the shareholders suggested that why don't you split the shares from the rupee 10 to rupee 1. This issue was debated in the board of directors, who felt, well, it doesn't really increase the intrinsic value. But then they felt, yes, we should be looking at the issue of increasing the shareholders' value. How we can do it? What we can? Are there any other ways? There are demand for bonus. again, bonus technically doesn't increase. It is the same money after all, which is the shareholders' money. So they directed me to consult few good financial analysts who could come and explain to them and suggest what could be the better way of increasing the shareholders' value.
So you've decided upon a restructuring of capital, is it?
Yeah, we will look into all options what financial analysts suggest us.
Meaning a buyback is also on the cards? I mean, could be on the cards?
I mean, right now there is no limit. You know, we have not been specified whether buyback or not. But what is the way to increase the shareholders' value?
Okay.
You know, that's the full agenda.
Right, but Mr. Gera, would you have a certain sum in mind with regards to how much capital is there for restructuring?
Sorry, how much? I didn't get this one.
A certain sum in mind. If you're talking about a buyback also, is there a certain quantum?
No, right now buyback is not. I mean, we will let's talk to the analysts first and look at their suggestions. Everything has a positive and everything has a problem also. It's not that everybody, even buyback is not the best option, you know. We are already a very small equity base, 76 crore. So buyback at this stage, we have not focused on the particular means. But we would like to look at everything possible, looking at pros and cons. And once we have, then we will decide.
Okay, one last question. Have you already finalized, a financial analyst to help you through this process?
Not yet. No, not yet, because it was only last week, Friday.
Okay, so it's still going to take some time. I mean, the timeline to this restructuring will be slightly longer.
Yeah, there will be some time.
Okay. Mr. Gera, just one question. I mean, you're obviously saying that your stock is undervalued related to the market. I can see that over the last 2 years or last 3 years, your financial performance has been pretty healthy as well. How do you expect FY20 to end the year, sir? FY19, I believe you did 3,100 crores of revenues and about 690 crores of profit. What about FY20?
FY20 is not going to be the same, obviously, because last year was too good because of the BIS issue or the standard on caustic, which has a 50% value. But this year, prices in the market are not of the same level in the caustic, and all those imports are coming. There's a huge competitive. So we will be better than, let's say, 18-19. But not 1920. We will be better than a year earlier. But last year, we won't be able to match this time. It doesn't look like.
So revenues might be slightly lower than 3,100 crores, is what you're saying?
Yes.
Okay. The same thing for profits as well?
There's a pressure on the margins completely this year. You know?
Okay.
Although, and the last time only 2 of our projects got completed. So, we got a lot of revenue increase on that also.
Okay. Great. Thanks for being so candid and all the best. Do update us via exchanges or otherwise about when you take a decision for the capital restructuring. Well, here's a company which believes that the stock is not valued well and therefore they want to take some measures and steps in order to try and reward shareholders. No, fair call. Okay, stocks which are doing well and amongst others, Siemens with the move that it has made today, hitting close to life highs, as is, I believe, Bajaj Finance, which is now above 4,000. The one that intrigues me only because I do not quite know how the business is moving here is Adani Green Energy. A lot of these newly listed Adani Group stocks, Samir Kalra, have been doing quite well. Any thoughts on Adani Green Energy?
And they just got some assets from the SL Group as well, I think.
Yeah, so I think it's better to just ride these kind of rallies, because fundamentally, if you see again, the over leverage is just playing kind of a big part, and these constant acquisitions gives out a better optical revenue growth and profitability growth, but the balance sheets are getting overstretched. Till the time private equity or some kind of investor doesn't come in to ease off the debt pressure, and that also I'll wait for him to come in. I'll not jump on the rally that there is a news that is building up, and that becomes more sustainable kind of a drive for me to invest in it rather than trade and on that 20% or 30% kind of move.
Any of these new businesses, rather not new businesses are fairly old, but new listings that you're excited about?
I think IRCTC is the one which I'm optimistic about in the medium term. and I don't see any kind of major risk to the system right now, until unless government really goes more aggressive on kind of convenience fees, or makes IRCTC do more capex, because they already have to set up a lot of base kitchens, water plants. So they have a good enough capital expenditure for next 3 to 4 years. So until and unless that goes on the upside risk, I think cash flows and margin wise, I think.
So it's a subscribe.
Yeah, it's a sub.
Okay. Anything else? Metropolis, Apple, IndiaMart, Intermesh. That's the one that's really done well.
So I think whoever has subscribed to it can hold on to it, but I'll play it very quarter to quarter kind of a investment right now, because any kind of a base after 4 quarters will start to play off, and how they grow on that. Secondly, if I see Metropolis, I took up Dr. Lal instead of Metropolis when the IPO came in, because I saw a lot of suppression in the valuation differences and expectations of it. So I think still I'll be better off holding Dr. Lal rather than Metropolis from here.
Okay, some stocks which are correcting, and Ajit, I would want you to come in on the 2 financial names which I think we spoke about fundamentally, but wanted the chart view on them. One of them is Yes Bank, 12.5% at 42 rupees right now. What do the charts suggest? The other one is Edelweiss, which is now in double digits, 95 rupees.
So, Neeraj, Yes Bank, we have discussed about this counter earlier also, that the stock has been under pressure, almost vertical pressure from like 280 levels. We have hardly seen any respite in between. So, despite being extremely oversold, we have hardly seen any rebound. That clearly indicates that bears are completely under control. What is something kind of silver lining is that 40 is a level where the stock had bottomed out earlier in last couple of instances. So in case if somehow it manages to hold 40 levels, we may see some rebound. But overall, there's no sign of recovery or any sign of rebound yet. Edelweiss too, we have seen a marginal rebound, but again, the rebound fizzled out in no time. And again, we are seeing the stock is, going southward. So in case if somebody is holding longs in Edelweiss, I would recommend to exit those positions and wait for the stock to stabilize first. But in Yes Bank, since we have reached closer to the critical support area, wait for the rebound.
All right, I think in the next Nifty rebalancing review, if things don't improve, probably see Yes Bank moving out after Indiabulls Housing Finance. I think it's a market cap now sub 10,000, closer to I think 9,000 odd crores, probably the least in the index. And you do have a few other within the Nifty Next, Nifty 50, which could be candidates. But we've just seen a rejig. Nestle has just come in, so I think we'll have to wait till the January review to see what Yes Bank does. But Indiabulls Housing now is down 34%, so watch out for that one. And we probably thank our stars that it is not in the Nifty anymore right now, at least in keeping in mind today's fall. Stocks at 256 right now. Indiabulls Ventures is down 20%, and we've already spoken about the rest of the pack. The Indiabulls Real Estate also, which is down on lower circuit of 10%. But it's time now to take a look at what dealing rooms are recommending. Yatin Mota is here with his channel checks. Yatin, what have you been hearing?
Devina, ITC is one of the frontline stocks which is quite active in trade today on decent volumes. Remember, it has a 14% plus weight in the Bharat 22 ETF. And on the back of that, a lot of buying is seen in the open market, 3% up for that one. So almost at the day's high. ITC is something which dealers are watching out for at this point in time and recommending a BTST strategy. Apart from that, BEML is one of the divestment favorite counters in the HNI circles. They are even at these prices adding up stock. Remember when the government last time had announced the divestment, the shares went up over 1,500 rupees a piece. Right now the stock is around 957, and a lot of HNI accumulation seen at current levels. And finally, Yes Bank is something which is in focus, 15% down. Dealers are indicating that even from here, at these levels, there is heavy FII selling, which is expected. So they are, cautious on particular private sector banks, including the likes of Yes Bank.
All right, Yatan, thanks very much for that. And Yes Bank obviously remains in focus for what it's doing in today's session at 41 now. So the journey from 400 to 40, that's been quite a turbulent one for Yes Bank. But we'll come back and talk about a whole host of other stocks. This year, the stock's down about 77%. But moving on, the Trump administration may cap U.S. portfolio flows into China. Should emerging market investors be concerned? Earlier today, we put the question to Manish Chaudhary of BNP Paribas. Yes, here's what he had to say.
Actually, this global political and geopolitical fluctuations, if I may use that word, they're possibly the most difficult to predict right now. And the translation into trade across the world, the trade volumes and trade growth, they possibly constitute the biggest risk factor. Apart from the global central banks and how they're going to react. But I think on the second aspect, that is the global central banks and how they're going to act with their monetary policy, their reaction function, we are relatively more sanguine. We think that the likely monetary easing that's likely to continue, and in fact we also believe that apart from interest rate cuts from both the Fed and the ECB would also engage in a second round of quantitative easing. But the geopolitical side, which is also translating into continued trade tensions, they're much more difficult to quantify and much more difficult to predict as far as the likely solution scenario goes. That's why it becomes very difficult to predict how the market is likely to behave. We think that over the fourth quarter, we are likely to see some degree of depreciation in the developed market currencies, whereby the emerging market currencies and therefore the emerging market risk assets are likely to benefit from some additional degree of fund flows. But at the same time, even such benefits can actually be very short-term in nature. To put it in a nutshell, we are actually, almost looking at the markets on a very short-term basis now. For longer-term investors, we are advocating much more defensive strategies, which focuses on high dividend yield stocks, the domestic consumption-orientated stocks, and also various other defensives whose earnings seem to be relatively protected.
Okay. Would you look at the heavy capex industries, infrastructure, and obviously with the push to infrastructure, the allied spaces as well, steel, metals, and cement?
Right. So, see, in the context of India, the situation becomes slightly different because of the various economic policies that have been undertaken over past few weeks. If I look at this corporate tax rate cut, it is clearly a push towards corporate investments because, as I said, usually an investment project, the viability of an investment project is predicated on the back of return on capital minus cost of capital, or when it comes to risk capital, it's usually predicated on the back of return on equity minus cost of equity. And this measure straight away leads to about 10 to 15% increase in net profits and therefore increases return on equity proportionately. However, I must point out that one has to pay attention to the cost of equity as well, because if the bond market is apprehensive that this would lead to a significant increase in the government's borrowing, then risk-free rates and therefore cost of equity could also go up, and therefore that ROE minus COE gap could be kind of neutralized. So, I think beyond this, one has to look at the government's plan about neutralizing this higher fiscal outlay. If that comes from significant degree of asset sales, which would preclude the government from borrowing more and therefore crowding out private investments, that would be a significant positive for the investment sentiment and therefore a significant positive for the entire industrials and construction universe. So that is what we have to figure out going forward. But prima facie, I think for Indian capital markets, industrials, industrial conglomerates and the construction and capital goods companies have got a boost as a consequence of these measures.
That's Mishra Chaudhary with his thoughts. Okay, let's try and last 9 minutes of trade left. Let's try and get in some closing strategies, maybe some investment ideas from both our experts and Samir as well. But Hemen, to you first. One stock as a closing strategy, BTST or STBT?
No, I'll go in for BTST, Neeraj. I won't go in for STBT. So I think that one stock would probably be Asian Paints, BTST.
A BTST on Asian Paints?
Not Berger. In the context of movement, Berger versus Asian?
No,
Asian?
It's very different. Berger is giving a downward key reversal today, Devina. The hourly mechanical indicators are in sell mode. Asian Paints is on the verge of giving an upward key reversal. Hasn't given the hourly mechanical indicators are on the verge of giving a buy. So there's a little dichotomy over there.
Ajit, what about you?
Devina, Tech Mahindra, I feel, is again a candidate to go for fresh long. We have seen solid reversal of late and solid consolidation of late, and it's set for a move. So with the stop loss of around 705, one can shade fresh long and take him.
Okay, got that. Samir, anything that you like from a slightly, maybe not very long term, because market dynamics changing so frequently now?
So I think I'll dissect two sectors, as in it's not sectors, it's like promoter led. One is mainly MNCs. I think go back to SKF. SKF is one place where you find that kind of a leak. And then you can go to ABB, Siemens. Do a SIP in these companies. They don't have corporate governance issues. There might be restructuring issues which come once let's say 3 years or 2 years, which is still solvable kind of issue. And second is life insurance, as you guys were talking about. So I think over there, if in both places you keep on doing SIP, you'll be safer off. Then the valuations concern, see, if you started a SIP in HDFC Life, let's say at 400, then it still would have given you that kind of upside because it was expensive at that level as well. It wasn't cheap at that level. So I think it's better to do a SIP in these kind of safe and sound kind of sectors and promoters, because I don't see any kind of reversal in these kind of trends in the next 6 to 9 months at least.
Okay. Anything on Mindtree now, post the acquisition and the growth trajectory that's been laid out?
I think that's one stock which was the best when L&T really got aggressive in their strategy to acquire it. And I think that's where the whole thing faltered out. So it's even better to exit right now, because I think margins are still facing a lot of pressure. Pricing in mid-cap IT contracts is still not there. So I think the volume growth story over there is kind of tipping off, which tipped off last quarter. So I think there are a lot of issues. If you want to remain in IT, be with the large caps.
Okay, got that. Samir, we'll let you go on that note. Thank you so very much for joining us. Samir Kalra there with his views on the market. Just want to quickly look at a few other movers in this session. And Bharti Airtel is now up about 6% in trade, and so is Vodafone Idea. So looks like telecom is doing well for itself today as well. Vodafone Idea 6.5 odd rupees. That's up about 11.5, and it's picked up actually. It was almost closer to about 4.8 odd rupees, and then from there 5.8 rather, and then from there it's picked up to where it is right now. Reliance Industries is doing well, so that's helping support the index a bit. That's up about almost 2% for Reliance Industries, and then in fee being and TCS also being heavyweights, about 2.5 to 3% a piece. That's doing okay. Oil and gas IOC, ONGC, both are up in trade today. I want to pull up the Nifty PSU Bank Index and the Nifty Private Bank Index. The PSU Bank Index is down by about 3.5%, so it's a massive cut that's come in, more than the private banks, 2.8% under for the Nifty Private Bank, which is why you're seeing an 800-point cut now on the Bank Nifty. We're very close, in fact, to breaking below that 29,000 mark itself. And remember, just a day or two ago, you were at about 30,000 plus, closer to 30,100 odd. And this has come down pretty quick in that sense. But let's start wrapping up the market. We're just about 3.5 minutes away from it. Neeraj is going to wind up the markets for us, Neeraj.
Yep, well, the banks, and no prizes for guessing. Today it's been all about banks. Frankly, as we discussed, actually, when the show started, the Nifty too was down about 0.75%. So there's been a sharp recovery in the Nifty itself, but banks under a bit of pressure. Now, we don't know how much does this get extended by, because the pressures seem real. And there is clear and present danger and likely to stay. But let's wait and watch. We'll take each day as it comes. For now, around 29,000 for the Bank Nifty. This one has clearly succumbed to selling pressure. Not so much for the Nifty and the Sensex. They are holding out okay for now. The mid cap and the small cap indices should also come up on your screen, and sharp cuts there, about 1.5% apiece for both the mid cap and the small cap indices. So the market breadth would be weak in the session today. First, the gainers and the losers on the Nifty, and then Devina will of course speak about the mid caps and the small caps. Bharti 6%, we just spoke about it. UPL 3.5 or 4%. I don't know if it's got to do with the LATAM transaction that one of the other companies did. And UPL is a large LATAM market. HCL Tech about 3.5, Infosys 3%, ITC 2.5, Reliance Industries about 2%. So Reliance, Bharti, Vodafone, all three doing very well for themselves in the session today. Tech Mahindra about 1.5% too, so that's not done too bad. What's not done well? Banks. IndusInd, SBI, ICICI, then HDFC squeezes in between. There are news-based moves in Cipla and Z. But largely banks. Axis Bank too down about a couple of percentage points, and it just goes to show the kind of weight that banks are pulling on the bank, on obviously the Bank Nifty, but also the kind of subdued moves that the Nifty is making as a result of the cuts in the banking names. But if large cap banks have corrected, broader market NBFCs are no exception to the rule.
Well, no, they aren't actually. And even the smaller PSU banks, Neeraj, they've weighed down heavy in today's session. The mid-cap index and the small-cap index at the start of the show were down closer to 1.7% apiece in terms of the index move, keeping in tandem with what the benchmark index has done, which has seen a slight bit of a recovery. There too, we've seen a slight bout of recovery, but it's still not as much. So we've still got major cuts across the board. Coming down to the losers first off, and then we'll talk about the gainers. The Indiabulls group, the trio there, that's Indiabulls Housing Finance, that's down 35% by close. This is going to be a major cut across the board in terms of, for shareholders, value destruction today's session, wealth destruction in these three stocks. Indiabulls Ventures, that's down about 20%, I think, and Indiabulls Real Estate also lower circuit of about 10%. Then the other group stocks, which is the SL group stocks, Z has been down. We've got Dish TV now, which is down 6.5% as well. I don't know what Z-Learn is doing, but Dish TV's got a major cut in today's session. And Edelweiss, a major exposure, to loan against property, and most of these NBFCs getting beaten down for that. Remember, you had Altico, which defaulted. Edelweiss has a big portion of their book as well towards property, so that one weighing down about 10.5%. RBL Bank is down in today's session, and the rest of the PSU lot. So you've got UCO Bank, Andhra Bank, Syndicate Bank, all of these names looking extremely weak in today's session. More names then. Spark, that is down in today's session, and Gati sees some profit taking. Last few days was not bad on the interest of all cargo, but the stock now is down in today's session. What's doing well? Brigade Enterprises is doing well. Remember, time and again, whenever we've spoken to the management, they have spoken about how strong their book is and how strong their balance sheet is in the affordable housing segment. So they're doing well for themselves. Stock's up about 6% today. Indian Hotels, Vodafone, as we already said, is doing well. Sonata Software, Gujarat Gas, Rallis and are some of the other names that are doing well in today's session. But all in all, the color is red.
Yep, the color is red, and Devina rattled off so many PSU banking names as well. Just that index will show you the MRR of the index, if we can pull that up. It'll show you the quantum of cuts that have come in, because it's not just the private banking space, the PSU banks as well. Look at those gashes, 3.5% down for the index. And even the big boy, State Bank of India, has not been spared. 3.5% down for that one. And that single-handedly has so much of weightage. But the others too have all contributed. All the stocks in the red again.
Yeah, let's also take a look at what the point contributions on the Nifty 50 have been like this afternoon. And then we take a look at the advanced decline ratio. So while Reliance, Infosys did try to support the index, and actually not bad to say towards the end, they managed to have a decent enough pullback. But again, the banks had a heavier hand, and IndusInd Bank particularly, which was down closer to 6% in today's session.
Yeah, I mean, HDFC Twins, by virtue of the weightage that they have, would naturally be contributing. The turnover should come up on your screen as well. And let's see how the volumes have shaped up in the session today. Cash market volumes seem to be on the higher side. Very interesting to see the delivery-based volumes in some of the banking names in the session today.
But interestingly, even if you look at the FII data, Neeraj, on days where you've seen the markets move up on heavy cash turnover, FIIs have actually been more prominent in the futures and options stage, which suggests that they're probably still right now testing the waters, wanting to take a shorter term play on India as a market rather than go whole hog and start investing long term and taking delivery based buying for stocks. But on the futures and options side also, about 10 lakh crores in terms of the turnover that we've seen.
Yeah, but the cash market turnover, pretty interesting. Well, time will tell. For now, closing thoughts from both our experts. Ajit, we've spoken at length about the Nifty and specific stocks. The bank Nifty, what kind of levels does today's fall open up?
So you're right, yes, that this decline, the underperformance rather, from Bank Nifty has basically kept the market under pressure. And tomorrow also we might see an opening tick on the lower side, but I feel that 28,500 is going to be very critical in case if Nifty has to rebound, the market has to rebound from the current levels. So 28,900 is the immediate support, or 28,500 is going to be the next major critical support where we have conclusion of multiple moving averages. So I feel this levels will definitely going to hold, but the idea is stick with the quality names in the private banking space, because we have different categories now in the private banking space also. That one who is still hovering around record high, and others are struggling like IndusInd Bank and RBL Bank. So stick with the quality names from the private banking space, and we are hopeful for the rebound in days to come.
Okay, Hemen, what about you?
VIX cooling off a bit, Devina. Holiday, credit policy, mild upward bias. If there's a fall, I'll probably take a counter buy call.
Okay. We leave it at that, gentlemen. Thank you so very much, Ajit as well as Hemen, as always, for joining in and spending your afternoon here on BloombergQuint. And with that, it's a wrap on this edition of Kanan from Neeraj, myself, and the entire team that's put the show together. Thank you so much for watching.